I'm going to start off with an introduction. You know why we're here. The federal government is proposing new tax legislation which will do serious harm, in our opinion. And Nanaimo Chamber, BC Chamber, and Canadian Chamber of Commerce's mind, as a coalition of small business, Canadian Federation of Independent Businesses, are all on board saying this is a bad plan. It will negatively impact up to 90% of Canadian businesses. There's been no time for honest consultation. I believe it was around the 25th of July. Have a seat. 25th of July or mid-July that they sent this out there and said, we want to do consultation with Canadian businesses. You don't start doing consultation with Canadian businesses in the middle of July. And they set a deadline of October 2nd. Now is about the time when everybody gets back to business and realizes what's going on and have to start to deal with this news, and with less than 30 days to provide any kind of consultation or input to government that would be effective and meaningful. And yesterday, Finance Minister Morneau was on the news saying the consultation only will address how we're going to do this, not whether or not we're going to do it. So they appear to be fixed in their position that they're going to move ahead with these changes, proposed changes, which will hammer us all. And so I thought as soon as we get back to work here after the Labor Day long weekend, we need to sit down, have a roundtable discussion about how these things will affect us. And MNP has been kind enough to bring their folks in to give us an outline of how that is. I dropped a one-pager on everybody's place there, which sort of outlines the Canadian Chamber of Commerce's tack on this thing, and what other chambers around the country are going to do. We have some follow-ups that we're going to do here in Nanaimo after today, and I'll talk about those afterwards.
As Kim has said, this is not honest consultation. I'm disappointed that this proposal from the Liberal Party has alarmed a lot of hard-working people in our riding and across the country. And I really appreciate the opportunity from the Chamber to bring people together. The more that I can get your personal storytelling about personal impacts here in the riding, on your business, on your family, the better I'm able to represent you when we return to the House of Commons on September 19. And I think it's going to be a pretty fiery return to House of Commons. So again, I'm sorry that this proposal is causing consternation. It's totally the wrong way to go about any policy perspective, and in my view, the wrong slice of the country and our economy to take on at all. So look forward to hearing your advice from me, and looking forward to working hard with you to get this proposal off the table and get back to doing what we can to support the drivers of our economy here in the riding.
Great. Well, Lauren?
My purpose here is really to explain some of what these proposals are. But don't worry, I won't get into sections of the Income Tax Act and grind through details, but I want to give you sort of a 10 to 15 minute overview of what these proposals are, and touch on some of the impacts, and then hopefully we can have a talk, speak some more about the actual impact on business owners here. So it was July 18th they dropped this on us, and there's really a three parts to this. One is on income sprinkling, and that one they have included draft legislation, so it is effective. Parts of it are effective July 18th. Other parts are effective starting in 2018. But this isn't them thinking about this. There is pages and pages of draft legislation to implement this. The second piece is holding passive investments inside of a private corporation. On that part, there is not proposed legislation. There's several pages of descriptions of what they want to do. They've talked about consultation and looking at various options, but then they effectively put two options on the table. One was the 1972 plan, and then they said, but we're not proposing to follow that plan. and then they put a second option on the table. So there's really only 2 options. They're not really consulting at all. And within the option they are considering, there's 2 sort of sub-options, I would call it. And number 3 is converting income to capital gains. This one also has draft legislation included. And in the language that the government is using is closing loopholes. Number 1 and number 2 are not loopholes at all. It's just been the ways private companies are taxed in Canada for the last 45 years. Arguably, number 3, there are parts of that it is a loophole. So if there is something the government is trying to close here and that I don't think most businesses would be up in arms about, it's that piece. But having said that, there's a whole lot of collateral damage from their proposals on that affect other things beyond the so-called loophole that they're trying to close. And these are by far the most significant changes to private company taxation in my career. And my career hasn't been 45 years, but it's by far the biggest change since the major tax reform that happened back in '72. So I'll go through each of those 3 items in a little bit more detail. And the way I want to present this is trying to get at what the government's concerns are and then what businesses' concerns are as a result of what they've come up with. So the government is coming at this from a perceived fairness perspective and want to ensure that business owners don't have tax advantages compared to employees. And Minister Morneau's been on that quite a lot, that employees and business owners should be treated the same under the banner of fairness. But I think the challenge with that is that they're not the same, and to treat them the same is not fair. So they're going to take there's existing tax on split income rules, and those came into effect in '99, and that was to put limits on. Prior to that, you could split income with minor children. That really went away back in '99. They're looking at extending those rules. So now family members receiving dividends, their concern is that family members who may not be contributing to the business are receiving dividends. And they're concerned that the benefits increase. If an extreme situation, you had a business making $2 million and you had 10 kids, you could split that a whole bunch of ways, and I think that is one of the concerns from the government side. Some of the business owners' concerns, counter to the claim that this is closing loopholes that some high income and wealthy families are taking advantage of. These proposals in some way will impact virtually all private businesses and their owners, and not just high income earners. So I think if they were really after what they said they were after, they missed the mark. And it's impacting a lot more families and more businesses than what they're after. Again, they're drawing a parallel between employees and entrepreneurs and showing, in my opinion, a lack of understanding of the key differences between the 2 groups. Again, they're not the same and don't have to be treated the same. And I think one of the real concerns as we dig into these rules is the level of uncertainty. So, picture in the future you're splitting income with family members who are involved in the business in different ways at different times, and you're going to have a CRA auditor coming in and evaluating what's the value of the efforts that your spouse and your children are putting into the business, and we think that's problematic. And these rules again they're untested as well. So imagine when you disagree with the CRA auditor, you're going to go up the chain for disputes and go through appeals at CRA, and then the next level is tax court, and on, and it's going to add a whole layer of uncertainty and distraction to actually doing what we do, which is running our businesses. A very high-level overview of the changes, but any questions on the income sprinkling changes?
Is there anything in the draft legislation on the reasonableness of wages paid?
They've got 4 different sort of tests, but it's not on wages. In this case, it's on dividends.
Just dividends,
Yeah.
not on wages in this legislation?
No. So if you go back to where we've been for a long time, which is reasonableness of salaries paid to family members, I think what you're going to see is a lot of people just going back to paying salaries instead, because at least we have some idea of what the ground is like on that, whereas it's untested on the dividend piece. But there's 2 sets of rules. There's one set of rules for 18 to 24-year-olds. There's a tighter set of rules, and then another set of rules for 25 and over, and 4 pots that they're going to sort of reasonableness tests that they're going to look at. But nothing that's very certain. Okay, so passive income or passive investments held inside corporations. Government's concern on this is that entrepreneurs gain an unfair advantage. So really what they're getting at is as corporate tax rates have fallen, you have a situation where you might have a corporate tax rate of 13% being paid, so you've got 87 cents on the dollar left to invest in the corporation, whereas at today's tax rates you might have 50 cents left if you're paying top personal rate. And they see that as a problem. So that's really the core of what they're trying to get at with this piece. And then they've come up with, like I say, some thoughts on how they could address that. From the business side, the business owner's concerns is this tax deferral is a key piece of what we do in business. We need to save assets inside the business for various purposes, including saving to grow business, buy your new building, do whatever you need to do to invest in your business, or simply to save for a rainy day, to cover off downturns, economic downturns. The minister has come out and said, well, you could just invest in RSPs and TFSAs instead of this. And it's not really a very viable alternative. So just imagine that you take these funds and you invest them in your RSP, and then you have a downturn in the economy, and where are you getting the funds back from your RSP? So it's just not really a very viable argument. Maybe I'll skip the second one. Another big concern I have on this is, and a lot of people are tuning into this, that it's only, when I say CCPCs, that's Canadian-controlled private corporations, are singled out on this. If you have a public company, or if your corporation is foreign-owned, you're not impacted by these rules, and you can save within your business. And in the name of fairness, I struggle to see how that's possibly fair to Canadian business owners. And the last point, the rules that they are musing about on this are going to be unbelievably complex. So they really want to get at the source of corporate funds, and you're going to have a bunch of different pots that you're going to have to track within your corporation to try to figure out where funds came from. So in Budget 17, the government said that one of their commitments was to reduce complexity and actually look at tax simplification. And these proposals are going a long way in the opposite direction of what they had committed to doing. I was talking yesterday with some developers in Toronto, and looking at, they're building large condo developments, very high dollar stuff. And where's their funding coming from? A lot of their money is coming from these passive investments within corporations. So, when you think of the economic impact, if these rules go through, those parties would have half of the amount, less than half of the amount to invest, and the rest would be going to pay taxes. So there are economic impacts beyond just tax impacts when you take that much money out of the system. Retirement strategies, so many businesses have, and business owners have planned their retirement strategies around these rules that have been in place for 45 years. They haven't done anything wrong. They're not taking advantage of a loophole. They are following the rules as they were. And they have, their retirement nest egg is sitting inside their corporation. They don't have a defined benefit pension plan. They don't have any of those other things. and now all of that is changing on them. Minister Morneau, try to be fair to him, has said that these will be on a go-forward basis and not coming after existing earnings. I have trouble with understanding how they're going to do that cutoff. I think that's problematic, the how. And when you combine this with the income splitting provisions, these people have planned on being able to split that income with their spouse in order to get the right after-tax income that they need in retirement, and that part of it would go away under these proposals. So I think regardless of what is being said, not all of this will be on a go-forward basis, and this will impact strategies that people have used for decades to get ready for retirement. And the result will be a tax rate of 73% on income that is earned within these corporations. It's a prohibitive effective tax rate. Again, that's the business side of the argument on those proposals. Any questions on that piece?
Yeah, on the 70% compared to the 50% that the employees pay. How does that 70% come about? Is it a surtax?
No, what will happen, Garth, is as it exists now on passive income earned in a corporation, you pay about 50% when the income is earned, and then you get a refund when you pay a dividend. The corporation gets a refund when the dividend is paid out. That refund will not happen anymore under these rules.
So they're getting
the simple explanation. Yeah.
On a go for it.
Right. But do you have another valuation day? How do you get a cutoff that's clean on that? And then you have income on income, and it's when you get into the details on that, it's going to be possibly you can do it, but you will have another 100 pages added to the Income Tax Act together.
Did they do anything on converting that income into wage income? Is there any comments on that?
There isn't any comment on that. When I think about what people will do, so the CRA has a long-standing position that when you pay salaries out of a Investco, let's say, to active shareholders, they won't challenge the reasonableness of those salaries. So if they stayed with that, presumably you could pay salaries out and split it between spouses. And that might be one of the answers going forward. Yeah.
But they didn't say anything.
It's an administrative position of the CRA. It's not binding on anybody.
Right. And they didn't say anything about that.
No.
In consultations or anything.
No.
Effective tax rate of 70%?
Yes, over 70. Yes. Converting what they're calling converting income into capital gains. Maybe I'll explain that a little bit. Is typically what would happen if you had a corporation and you had surplus after-tax earnings in the corporation, you had $100 there, you would pay out a dividend, and depending on the type of dividend, the shareholder would pay, let's say, between 30 and 40% on the dividend. There are strategies out there to convert that into a capital gain where you would pay 23, 24, depending on the province. So there's a tax savings there, and I think that is there's some more detail there I won't get into, but I think that's the core of what government is coming after on these ones, and likely they have it's probably good policy, to be honest, to go after that. I don't think that was intended. The problem we have with that is that there's a whole lot of collateral damage that's coming with their proposals to stop that. So their concern, like I say here, is converting what the top rate on that dividend would be 41, just over 41%, and you're converting it to about 24%. That's the government's concern here. The concern of business is that there's a whole lot of collateral damage done by this. Another thing that government talked about in their budget 2017 was that they recognized that under the existing rules, it's more difficult to transition your business to a family member than it is to transition your business outside of the family. That's been a long-standing issue, and they had made a commitment to address that. These rules make it significantly worse. much more difficult yet to transition your business within the family, and the downside if you get it wrong and government disagrees with you, it's worse than it ever was before. So it makes it much more difficult. The other big item here is the last bullet. Currently, there's really two strategies on death of a shareholder of a private corporation to avoid double tax. You pay tax once on the date of death on unrealized gains on the shares, and then there's potentially tax being paid again when things are dividended out of the company to wind everything up and move it out through the estate to the beneficiaries. There are specific provisions in the Act to allow a loss carryback to address that. And then there's another common planning item that's called a pipeline. These rules eliminate the pipeline plan and just leave those specific proposals. But those specific proposals don't always work, and there's a 1-year time limit. So there are situations where those are not effective, and you need the pipeline. And that is gone under these proposals. And that just leads to, it's just pure double taxation. And which, again, as you're done under the name of fairness, double taxation is not fair to anybody. The other large item here is there's a new provision in the Act that is what we're calling a surplus stripping provisions. It's really an anti-avoidance provision, very vaguely and broadly worded, which is going to lead to a whole lot more uncertainty. I'm calling it the mini GAR, and for those of you who know GAR, that's General Anti-Avoidance Rules. Those came out in '87, effective in '88, and it was 17 years before the Supreme Court even gave us a framework of what those rules mean. This is going to go down that same path. It will be at least a decade before we really know what these mean. So again, adding a huge amount of uncertainty for business owners as to what they can and can't do on what are really innocuous transactions that could potentially be caught here. So I think what we're saying and what MNP's position would be on this is we really need to pull this back and have a true consultation. Fair enough if government has concerns, but let's work together to address those concerns in a way that works for business. Again, this slide's really talking about what I've already covered. So the consultation period ends October the 2nd. There's certainly been some talk and some requests on government to extend that. So far, I've heard nothing back from government entertaining that notion. Don't know where that will lead. I think we know that the caucus is meeting in Kelowna yesterday and today. We'll see what comes out of that. So input is asked for it within that period. Certainly, my firm and lots of others will be making fulsome submissions on the proposals that will go to finance. I think there's other things we can do. I'm just releasing today for our clients and others sort of letters and things that can help you if you want to make submissions of your own to your own MP and to the Department of Finance. And I would, if you feel strongly about it, I would recommend that you do that. And I would defer to Sheila on the effectiveness of that, but I think government needs to hear from business owners that are affected. Yeah. Any questions on any of that? Yes?
Do you have any actual numbers that we could use to present to our members? Say your business makes $250,000 a year and you have 2 people in the family, and this is what it's going to mean to you, so that we can actually show them in terms of numbers what the changes might be?
Yeah. What I would recommend on that is that there's actually an example in the documents from government on this, and I like to use those because they can't argue that we're making anything up. And it's a situation that's very similar to the one you described. It's comparing what employees, a salaried employee would pay versus what a business owner who is splitting income would pay. And certainly we can get that for you.
Okay.
I think that what the example is missing is what the employee has that the business owner does not have, which is probably a paid pension, vacation pay, overtime, paid benefits. I think that's not really compared to in the after-tax income that comes home.
Not to mention, not only just working 9 to 5, but
Yeah. Family
8
costs.
hours a week.
Yeah. The costs that you can't count.
And risk.
Risk is huge, yeah.
Yeah.
And family stress.
Yeah.
It's a big one.
Yeah.
I would imagine any business owner family that I've met, there's a cost to the family when there's a small business in that family. Like you're missing your parents being home every night, the children are participating in some manner whatsoever to help the business succeed, and that's not being accounted for. So I think if anybody talks to a small business family that owns a business, there's a family cost.
Yeah, it's not just any small business, it's all small business.
It is.
You know, everybody who owns a small business in Nanaimo, landscaper, plumber, architect, whatever, they work during the day, then at night they go home, they might have dinner, and then they work on invoicing, and then they follow up emails, and then they work on collections. And then when that client who doesn't pay them in 30 days, but they still got to pay their staff every 15th and 31st, and their payroll deductions and their GST, next thing you know, they're falling behind the 8 ball. And, oh, what about that risk?
And they still have to make payroll.
They still need to make payroll.
They're
Oh, they
creating
missed
jobs.
payroll. Here's a $500 penalty.
Yeah.
Or, you know, a staff member can work for you for 3 years, 2 years, and they've got job security and they want to go buy their investment property, and they can because they've got a steady job and they've got 2 years of earnings. But the small business owner who might have been like, oh, I'm going to start my own business because I love being a plumber and I feel I can make a change by being a plumber, can't. They can't go buy their house because they got to make payroll, or they got to do this, or in all that risk they got to take on being a small business owner. Why? What's the point of being a small business owner if there's no benefits to retirement planning, to tax planning, to anything, right? Now all of a sudden you're working for yourself and you're unhappy, and then your services might go down and the quality of your work's going to go down and your clients are going to be unhappy, and the only people who are going to be happy, nobody. It's like, it's a lose-lose situation. I was going to ask you, should, if you wanted to, talk about the lifetime capital gains exemptions in regards to selling your business. So here's a fun one. It's almost promoting selling your business not to your family, but to a third-party arm's length transaction.
Oh, it is. Oh,
Like, it's huge.
It's much easier to do that than to sell within your family.
Little Billy really wants to be a plumber because his dad was a plumber. His dad built this awesome plumbing business and worked till 10 o'clock every night. And now little Billy can't buy it because it's going to affect dad's retirement plan, right? It's tough.
People aren't going to want to go into business. They're not going to want to risk everything in order to be in the same place as an employee. So they're just going to basically try and become employees. It's going to be more and more competition for those jobs. There's going to be less and less small businesses, which means that big business can basically demand and supply, right, for jobs, and they'll push wages down. So those people in what were sort of lower middle class are going to drop down to lower wages. It's completely illogical. It really is. And then big business will basically, they'll become those people who are, directors and board members, and they're going to become richer. And those, you'll have this bigger split between the rich and the poor. This is what's going to happen. And how are you going to sell that business? Because people aren't going to want to buy what you're selling, right? Because they don't want to take that risk. What the heck would they do that for?
Well, they also don't have as much enough money to buy it because they
Exactly.
can't have it in their investing holding company sitting
Yeah.
and waiting to buy it. So it's going to have a huge effect on sale of business. It's also going to have a huge effect on real estate development. One just north of town, that I'm involved in, a huge rental apartments which are needed in this community. If these rules had been in effect 3 years ago, the way that thing is funded is all through investment holding companies, to my knowledge. That wouldn't go ahead. There wouldn't be enough money there. So it's a huge difference on investment in this community.
Yeah.
That's what happened with realtors when we were able to get professional real estate corporations. Because when you're making money, you've got to be able to keep it for those downturn times when you're not, because you're not always maximizing
Yes,
your
especially in your
opportunities.
business.
Yeah, so the challenges are the same, and there's lots of, not just realtors, that will pick up a rental home. And, you know, the reason how you're doing that is because you're trying to leverage, means that's what your pension's gonna be. Because most realtors don't have a pension. So you can get that, and how did you get that second home? Well, I leveraged my first home because I got some equity in it and convinced the banker to give me a mortgage. We don't seem to be hearing much talk about, oh, how did I qualify? And as all the small business owners in the room go, oh yeah, I'm lucky I have a home, because if I went to my bank right now, apparently I don't qualify now because I'm self-employed. You know, that, and I think one of the things that government is missing the mark on is the reality of empowering the middle class. And that's where wealth is developed, is within those working folks that get out of bed every day and go and pay their 48% income tax. I, at least in my business, get to write a lot of my expenses off. But the poor guy that's got to get out and slave being an electrician and he might be making 30 bucks an hour. But if your income tax rate is that high, and if you can steal enough money out of your little business so you can get a future opportunity, that is the basis of our economy in Canada. Those middle class folks that get out of bed every day, and the opportunity for them, it's tough. It's really tough.
Now, Mono was saying that, you know, he doesn't like the fact that so many businesses are incorporating, right? So, you know, that they're able to use these tax rules. So this is one of the big things that he didn't like. But there's more reasons than just tax, you know, to incorporate. For a lot of small businesses, you know, the banks will say to them, you have to incorporate because I'm not going to give you capital unless you're incorporated, because there's limited liability, so they feel more comfortable lending to them. Investors, you know, they can draw more investors if they're incorporated, because there's less of a problem between, you know, there's more clarity for equity, right? Whereas, you know, you're not, there's problems with who owns what and how does it get split, right? I mean, there's lots of other
And if you're
reasons.
contracting to a large corporation, they're going to insist that you are operating as a corporation rather than an individual, because it takes
Yeah.
their liabilities away on payroll.
Exactly.
Yeah.
I mean, there's tons of reasons to
And
incorporate.
then once you've had a successful business and you want to try and take some of that money out, and you're at almost a 50% capital gain on it. So I know of a developer in Penticton, the largest landowner. So we want to talk about supply and demand in the real estate market. He'll only let out so many lots a year because he's paying 48% on capital gain. So if we want to talk about capital gain rollover, that's more relevant to creating wealth for the federal government. And nobody wants to talk about it.
I've had an auditor, CRA auditor in my office say to me, this is really interesting, he said, you know, we really don't get a lot out of small business. It's almost a waste of our time. Right? They say, the monies and where we're really getting a lot of dollars is in the bigger companies. He said, because they make a lot of mistakes, maybe on purpose, but oftentimes they don't have qualified people in their finance departments. You know, there's just a ton of areas that we can go after, and we do, and we make a ton of money. Listen, they're going, okay, well, that's really interesting. So why is the federal government not pushing more on big companies, stock option benefits that these guys are all getting? The money that's being transferred out of our country where no tax is being paid at all. You know, like these super wealthy that actually are abusing and evading tax. I don't understand why they'd be going after what is the middle class. This is the middle class they're going after. There's no doubt about that.
So the Conference Board of Canada says that if the Liberals had fulfilled their election promises, which were to crack down on offshore tax havens and to close the CEO stock option loophole, Conference Board of Canada says that might net the country between $9 billion and over $47 billion.
Yeah.
So that's the mystery of this to me, why they would pick a fight with the people that are voting and living and employing in the country when they could have actually done the work that they got a mandate from the voters to do, and they would actually benefit the taxpayer so much more.
That's why I would be in favor of going back to government and saying you clearly have some concerns. Let's have a talk about it. And I think if we talk to each other rather than coming out with a so-called consultation period in the summer, that we could make progress on this.
Mm-hmm. And that's one of the strongest recommendations coming forward is to at least extend this consultation period so you can actually consult, so that we can go to them and say, as an alternative, why not do this? Or explain our positions. Mina, this is going to kill entrepreneurship in Canada.
I was going to mention that what I do is I work with young entrepreneurs, anybody under the age of 40. And I mean, if you look at all the organizations and resources out there, all of us are trying to push for entrepreneurship. We're trying to teach kids at school to start thinking about starting their own business. And there's a reason we all exist. There's demand for it. Younger folks, they don't want to work for someone else. They want to be able to make their own rules, be on their social media, do what they need to do. But the one thing to remember is that they do all the things that you mentioned that business owners do, but they also have a social purpose. They care about impact. Those are important concepts. Like the number of small business owners that I meet today because they need to borrow money from me, but they're not looking to just start a business and become the next Steve Jobs, but they also want to make an impact and bring a difference to the community. And the number of times I talk to them, can you even live off of $1,500 like every month? How is that even possible? And that's the least of their concerns. It's about building the community, it's about building the right business, and it's not all about making money. They're given so much more back because the business, that the way they're going to run it, is going to be different from everything that we've done so far. I mean, we all know that. Dealing with millennials, none of us, like a lot of us don't like it, but their minds are pretty amazing. Like ideas that they come up with, the difference that they're making. I don't know. We keep pushing for entrepreneurship, start the businesses, make sure VIU students stay here and start more businesses and not go out to other cities. But then again, where's the incentive?
Well, I was going to bring up the VIU connection because I tell the story about 5 years ago when you'd asked international students up at VIU, what do you want to do when you graduate here? And say, well, I'm looking forward to working for a bank or a major corporation in downtown Toronto someplace. 3 years ago you asked them and they'd say, I'd like to stay here on Vancouver Island and get a job maybe in Nanaimo or in Victoria or something. You ask the students who are there now, what do you want to do? And they say, I want to stay in Nanaimo and I want to start a business because I want to help build a community.
Mm-hmm.
It's going to kill it.
Yeah.
One of my concerns with the whole idea of this tax on passive income being only on a go-forward basis, so that the person who has that, think about the person at hypothetically in the Department of Finance who's been there making a good salary for a long time and fine, and they have a good pension. Well, the value of that pension is probably, it's at least $2 million if you were to value that today. And so let's compare that to somebody who has $2 million saved up in their corporation. Well, under these proposals, that person could not split the income coming off of that with their spouse, but the person retiring from government with the pension can. So, yeah, I don't think that's fair.
So Sheila, what do you think the best outcome of this will be? Is there, what are the odds of us making them listen?
I think so far, in a very short time, I think the small business community has made the Liberal caucus extremely uncomfortable. And there's so much media saturation on this. It's being described by mainstream media as an attack on small business, which it is. So I think despite this being a dishonest kind of stealth consultation, which this government has certainly done on a lot of other files, they haven't had the kickback that they've had on this issue. So I think you're making headway. I don't think extending the consultation does anything, actually, honestly, unless we get a commitment that the government is actually going to have an honest consultation and identify the problem and look for the expertise and the innovation and the entrepreneurship within, our very bright Canadian community to actually find the solutions to solve the problem. If all we do is get an extension, then it takes the pressure off, and we're still answering the same questions that you all knew in the very first week of this. The solutions proposed are damaging to local economy, and they're not going to leave the government coffers really that much further ahead in any case. I personally think, although I've seen an awful lot of this on social media, and I'll just say, among friends, I don't personally think banging the drum about how hard working the small business community is and how they're harder working than employees, I don't think that gets us anywhere. I think it's a fault of the government to have pitted two classes of workers against each other, and I don't think that gets us further ahead, especially when we look at young people. As you say, they don't have pensions, they don't have benefits, they don't have anything, but they are still employees at this point. So I think personally we're much more effective when we can say, here is the cost to local economy, here's the cost to jobs, here's the cost to entrepreneurship and innovation, both things that this government says they really embrace. What's the cost to family continuity around being able to do succession planning? What's the cost for dips and valleys, the natural cycle that small businesses will have? I think to the extent that we're able to quantify that, and particularly, and this is what today's about, for me to be able to take some personal stories about real impact. So it's very important to have the big accounting firms doing very good detailed work on this, and it's equally important for the entrepreneurs in the country to say, this is what it'll mean to me and my family, and how many fewer people I will employ, and really to the extent that we can personalize that impact and take it away from the theoretical into the practical. I think that's where we're going to win this, and hit the government exactly, use their own words against them. If you're for the middle class, if you're for innovation, if you're for growing the economy, then this is all going to backfire. This particular tax plan is going to backfire on you completely. It's going to undermine your own successes and your own agenda. And by the way, instead, here are actions that we think that you could take. Keep your promises on closing the real loopholes, and if what you're really trying to do is beat up on the 1%, then prove to us that actually your tax proposals are uniquely focused on just those absolute wealthiest people. But I think we're already starting to do that today, and this is going to be helpful for all of us coming back to Parliament. So even if it doesn't kind of come out in today's conversation, I'll make sure that you have my contact information and let me know, especially those personal, local economy, less hiring, what is the human cost to your business if this goes ahead?
This is for Sheila's purposes. This is a gray-haired guy in the room comment. The last time we had a major change in legislation was January 1st, 1972, it was introduced. And prior to that time period, they did about a 2-year consultation with a number of white papers and a huge number of changes. But what that did in 1972 when they introduced that was introduce the concept of integration. Integration means that ultimately when the money goes into the pockets of the shareholders, they would have paid the same amount of tax that the employees did. And that's called integration. What they are proposing now, and that's what I wanted to clarify with Lauren, what they're proposing now is to get rid of integration, because when you get rid of the refundable tax, you're getting rid of the integration, which was the whole basis of the tax system, the redo by Edgar Benson in 1972. So this fundamental change goes away from integration, and when you go to university and take tax courses, the tax theory courses say the most fundamental concepts that you need to deal with are no double taxation, and the system needs to be integrated. And so more consultation in that time period seemed to be moderately effective. So maybe if we had a little more consultation and people actually thought about what they were introducing. The other concept you were talking about, you said CRA would be heavily involved in this. I would guess more of the finance.
It's
than
Department of
CRA.
Finance, yeah.
And they do not necessarily understand the Tax Act. That's a funny thing to say, but they don't deal with it on a day-to-day basis. So they look from a big picture. This is what we think this will do. The CRA people that are in the field will see it on a daily basis, and they actually know the effect of some of this stuff. I don't think finance does. I don't think they know the effect of this stuff, because there are a number of MBAs who have never been out in the real world actually paying the tax and generating the income. Or even CRA don't do that either, but they at least get in on the day-to-day basis, look at people's financial situation, and they know the effect of these changes. So.
Attention to Sheila's point about a lot of Liberal MPs are hearing in their own constituencies the concerns on this, and I think they're nervous about it. And my view is we keep it up. So I think we are making a difference.
I recommend as well, I mean, with respect, Don, I don't know that we're going to be able to tease out what's really driving this, and the time is short. So I really strongly feel that personal storytelling, illuminating how costly this will be to jobs and local economy is the most effective thing. And where the chambers and and CFIB have got some specific proposals on what you could do instead. You know, if there is work that could be done to close the true loopholes on capital gains, then be constructive, you know, in those areas. And if we can offer something else, then, you know, the government failed to consult properly on this, but if we were able to turn it into a consultation and say, we reject your offer, but we've got something else that we think is would get you further, and we think this is what you should be consulting on. We are seeing in other cases, I wouldn't say so much legislatively, but on some of the parliamentary process stuff, we have seen this government back down. They haven't been particularly tactical in the House, but they have been able to step away from bad proposals. And I personally think we're at a time where if you have the Prime Minister stand up and say, you know what, mea culpa, you know, we blew that, we misread the room, we misunderstood our own proposals, we hear you and we're dropping our legislative proposal. I think that's very powerful, and I think that any political party would be well served to be able to stand up and say that. So I think to the extent that our input can be extremely strong, but also to try to keep the dialogue open and keep feeding good information and keep the credibility that the professional organizations have. Another piece that Lauren just showed me this morning is some of the input that we're getting from doctors and from nurses, particularly women who are relying on some of these existing tools to be able to fund their own maternity leave, which they're not eligible for themselves. Again, that's a central platform of this government that says they're a feminist government. And also we know that we don't have enough family doctors looking after us anywhere in the country. So anything that drives people out of the business of providing health care, and especially is disproportionately bad to women, that this government should shy away from. So to the extent that we're able to illuminate some of those other unintended consequences, and to say you want to have a conversation about this. There's other consultations the government has given which have gone on for years already, really. So why we would not take, as you say, white papers, discussion, truly digging into the tax system if there are some fundamental changes we need to make, but not to do it over a 9-week period mostly, which is, well, we should be on summer holiday. So. mean, here the Chamber's done a great job of saying, you know, people think that it's still the big smokestack industries in Nanaimo that are hiring people, but to be able to say, these are the numbers. This is Vancouver Island Economic Alliance also doing really good work in this area. So I think Vancouver Island, maybe partly because of our defined boundaries, we've done a particularly good job about telling our economic story. So this may be a place that disproportionately we're able to put the data behind some of those arguments and show that real local economy cost. And to the extent that you're able to feed me that, send me even a 2-paragraph email, I'll stand up in the House of Commons and read it out in your own words. I mean, and I can pass it on to my colleagues for committee. If this does get to be a formal legislative proposal, which it hasn't yet so far as the government introducing it in the House, but at the point that it moves into that realm, then we can use those direct local economy stories to embarrass the government into backing off. They just they should not want to campaign in 2019 with those kind of stories and that evidence of the damage that they've done.
I think it's still starting to sink in. This whole, since what, the 17th or 20th or whatever date it was in July, you know, we didn't start to hear about it until the first week of August in Chamber world. And then it's been just such a challenge for everybody in all small communities to let it sink in, to find the time to sort it out in their own minds and go, whoa, talk to their accountants and find out that the implications on them are going to be huge. And the implications, as you said, come with a great deal of uncertainty. Is this really going to happen this way? And if that happens, then what happens here? And if A plus B, does it really equal C? And there's so many questions still. So it's very difficult it's been very difficult to get momentum going about any kind of a pushback. But we have, you know, the next 25 days or whatever it is to get that momentum up and running. You know, they say across Canada, small business employs 80% of the hiring across our country. Well, in Nanaimo, it's in excess of 90%. We know that, and it's probably the same in many other small communities too, where you don't have head offices, and you don't have big smokestacks and things like that. So from here, the Nanaimo Chamber is going to go into the public media, mainstream media, for what that's worth in our small community these days, and make statements there. We're going to reach out further to our members. We're either going to try to direct a petition or a survey or something, just so that we can comprise some numbers, put some numbers down on paper, and add our voice to the Canadian Chamber and BC Chamber going out there. There's a really good 3.5-minute news piece on Global, which is now posted to YouTube, that explains this all and makes a very good point of bringing around the campaign line that everybody in the Liberal Party was using about middle class, and how this is structured to kill the middle class. And, you know, as Lisa was saying, to create that greater spread between rich and poor, further decimating that portion of our society and our economy. So that's what the Chamber is going to be doing moving forward.